What's up, everyone? This is Comin Correct. Wait, what do I say in the beginning?
Comin Correct.
Come correct.
These guys come correct. Come correct. Comin Correct. Come correct.
What's up, everyone? This is our podcast, Comin Correct. I'm Joshua Moore.
I'm Joe Yerkins.
Riley Rosado.
And this is our guest today, Sharif Johnson. Just want to give us a brief overview of where you're from, what you're studying, and maybe a fun fact or something like that.
Alright, so yeah, I'm like, hi guys, my name's Sharif Johnson, finance major, born and raised in Carmel, Indiana. And a fun fact about me is I used to powerlift.
There you go.
Hey, you see this man in the gym.
And you still powerlift, right?
A little bit,
Yeah,
but
a little
nothing
bit.
too crazy.
Dabbles in and out,
Yes.
But yeah, today our topic is overarching finance, how finance relates to our lives. We have Shariff, who is studying finance here at UC, a third year. One of the hardest working students I've met at my time at Cincinnati. This dude's a complete grinder. So we're excited to get into it. Joe, you want to start us off?
Yeah.
The first question for Sharif?
Yeah, for sure. So we're going to kind of dissect this podcast into two topics. So the first topic is going to be kind of directed towards your emotions and how that correlates to money. And then we'll kind of dive into, Sharif is very knowledgeable about investment banking, as that's what he's studying specifically within finance here at UC. So we'll talk about that investment banking and, some investment strategies that you can take away from this. So
yeah, I just have a starting question. How did you become interested in finance? And when you were in high school, was that like you were dead set on like, oh yeah, I'm gonna be finance, that's what I'm gonna study, I'm gonna go into investment banking, or did it kind of evolve as you?
it's a great question.
Yeah, so to start, my mom always wanted to throw my name into a lot of investment apps, but the issue is I was underage, right?
Yeah.
So that was always like
Yeah.
a legal issue we always had. But however, it was like my senior year, wanted to do marketing, not until
Okay.
my mom stopped me. She was like, why do marketing? Do something that's kind of unique and bring in the math inside of it to allow you to
Marketing's
really...
unique, man.
Marketing's unique, but I'm a more analytical person. So
I
I was
got
into
you.
engineering, but the engineering didn't work out, so I wanted to do marketing, but she's like, do something that's a little more...
Slow your roll.
Yeah, slow your roll, right? So I looked towards finance, and then looking at it, like, it's a lot more math, a lot more logical applied to, and also you're kind of paid what your true worth is.
Yeah.
That is why I chose finance as my specific
So
major.
in high school, did you see yourself more of like enjoying the numeric side, or like the creative side, or like arts and sciences, or?
Yeah, that's a good question. So I'm more of a realistic application kind of person.
Okay.
Just because
That's
you really look at the numbers and what the numbers communicate to a person who's trying to apply it in their everyday life, from waking up to working out, even just trying to improve their efficiency in the work process.
So while you're walking to class, man, you're always doing calculations in your head.
Yeah, I'm an overthinker from start to finish.
I got you.
Realistic application.
I like
That's
that.
dope.
So your freshman year at UC, you knew that you wanted to pursue investment banking, or did it take a little bit for you to figure
So
out?
that's kind of funny. So I did not know not until after my freshman year. So my dad, he said, just do investment banking. And I was like, what is that? So he had me connect with someone who's an MD at JP Morgan.
Oh,
Spoke
wow.
with him. He got connected with an associate there. And we really chopped it up. And he kind of like helped hold my hand to expose me to the investment banking world. From doing a lot of pitches with a lot of people, applying a lot of programs,
Yeah.
from black diversity to broad, and also kind of building my mindset of what it takes to get there, to get into investment banking.
Gotcha. So you came in freshman year, and your first company that you really started to develop ties with was JP Morgan?
Yes.
Nice.
Is that where your dad worked?
No, so that's the funny thing. So my dad was a Kappa, and that's how he kind of grew his connection base from there.
Nice.
Yeah.
The kind of sidebar, did you ever want to be a Kappa, or like?
So I was actually thinking about doing that, not until I found out they're not on campus until like 2024.
Yeah, UC doesn't have a big like fraternity, black fraternity
Gotcha.
culture.
Yes.
Are you in any clubs here at UC directed around investments?
Yeah, so I'm in two, right? So one is in general investment banking club, which is more focused on case studies, applications. So case studies is more group projects, building off of what you know in class, from an evaluation standpoint, from a logic standpoint, and what the numbers communicate, and also just personal selling. Pitching it in front of a financial analyst who are investment bankers, and kind of see what do they know, how are they doing, and also how can I give them positive feedback to allow them to grow in their career. That's number one. Then building off of it from just connection based. Every week we always usually have a guest speaker, which is from a C-suite, from the top of like VP to even from analysts, to really give their perspective of how investment banking changing and their workspace, from Stout, Stifel, JPM, you name it, they have it. And that's from an investment banking standpoint. And then from the other standpoint is healthcare policy committee. So I do healthcare case studies, focusing on logical thought process, and I do fundraising, reaching out to CareSource, which is a company we're partnered with, and give scholarships towards students who would like to participate, and obviously the winner gets a scholarship.
Yeah, dude, I
didn't know any of
I
that.
promoted promoted one of your events last semester through American Marketing Association.
Yes.
What was that? The IUH APC or
Yes,
something? Like that?
HPCUC.
Yeah. No, it was cool.
Yeah, I do have another sidebar question.
Yeah.
So when people think about people that are more analytical and numeric based, they don't think they have the presentation skills or the interpersonal people skills. Have you noticed that, or do you think that's like a myth within finance?
You notice it, yeah. So me, I'm like the biggest criticizer of myself. So you kind of know where you have that afterthought, like, oh, I should have done this better, right? I should have done that. So you just apply it, but you gotta do the small things. So old saying, what you do inside the house, what you do outside the house. So from practicing that stuff, from like talking to my roommates, talking to my peers, even from my professors, that allows me to apply it when I'm in the actual out space. So I go like, hey, let me utilize my skills I practiced and honed on. Kind of like from start to finish, each and every day.
Y'all better listen to this man. Get a pen and pad and write it all down.
Take notes.
So I guess you want to kind of dive into the more structured questions for the podcast.
Sure.
All right. So the first topic, as we mentioned, it's going to be about emotional aspects and how money ultimately relates to your emotions and how you go about your day. So first question: how does money overall relate to your emotions?
Yeah, so my top 3 emotions, right? I looked at investment focus in terms of long-term future years.
Okay.
Second year is my current expenses. And then third year is just miscellaneous, liquidity, money I have left over. Like if car gets towed, food, even if I just want to go out and have a great time, that's the liquidity, I call it, right?
Okay.
So
like your spend money.
Exactly, spend money, right? That's my personal expenses, but in general, people need to really sit down and delegate that amount, like what do I really utilize most of my money towards to allow them to have a better perspective of their own finances,
Gotcha.
right? So cash flow, right? So if you could do this like on top of your head, how much money you spent in a month, even weekly, even a day, that's pretty impressive. But for me, I use a lot of apps. So one app is called Albert. So I use all my expenses on my debit card. So I utilize that, and Albert tracks that, and they allocate monthly how much money I spent. So I can kind of like delegate that. Okay, here's my forecast of future years, but this is how much money I spent. So I kind of know this is how much money I need per month to allocate that money when I need to buy it and stuff.
Cool. So my follow-up question to that is: do you track every single one of your purchases through that platform in Albert?
Yes.
Okay. Gotcha. So I was gonna say, for me personally, it's been working for me the past couple of years now. I made like a financial spreadsheet in Excel and just tracking like every single one of my purchases in there. Then like I had budget around like $250 for play money is what I categorize it as, just like money that's not like categorized under a specific expense. But yeah, I'll definitely look into that platform.
Yeah, no, you're good. And also, there's another thing. Whatever works, don't fix it.
Gotcha.
Right? If it's not broken, don't fix it.
Whatever. Yeah, that's
true.
right.
It's the truth.
Yeah.
If it's not broken, don't fix it.
I got a little caveat to that. You're talking about kind of application technology resources in the finance space. Somebody who's a little bit outside of this finance space, what are some tools, resources, apps outside of Albert that you would be willing to kind of share? Or is there any that outside of Excel, I guess, too, that you use?
Yeah, so it depends. Like, are you talking about from managing your expenses, investing, or just knowledge? Trying to build your knowledge.
Let's say knowledge.
Okay.
Just building financial knowledge.
So in finance, when you go to classes, kind of goes back to EHM, efficient market EMH, efficient market hypothesis, right?
Yeah.
And what it's saying is, if the market was efficient, it would be straight line, right? But since the market is so volatile,
It's very volatile.
that shows how there's so much new information coming out. which supports how no one really knows what's going to happen unless you have private information, but that's illegal, right? But building off of that theory, that shows how no one has the answer. But there's enough information to get an educated decision of how you expect the market to be current year and also future years. And future years is looking 5 years out or 3 years out. Anything past that, it's kind of hard to predict, right? But building off that knowledge, though, there's Guide to the Markets, JPM, Asset Management. They really give you a good understanding of how they expect the markets to occur quarterly and also long-term, depending how long they look out. Usually about like 3 years out or 5 years out. That's one. YouTube, Stephen Graham, very knowledgeable guy. He knows his stuff. Yeah. He, pretty impressive because he made his net worth off of real estate, just investing in properties. Very conservative, very steady growth. And also, it's pretty easy to make payments on a house because you can't afford to pay for it if you can't. You know what I'm saying? 10% down payment. So that's videos like that kind of like gives you an understanding of, oh wow, this is how he makes money. This is how I do this. In layman terms, so when you actually apply it, when you get a full-time job and also out of college, that allows you to really utilize those skills you learned from watching these videos.
Nice. Going off of that, have you read any interesting books in the past, pertaining to finance that have really taken your knowledge and your skill set about finance to the next level?
Yeah, so the top 2 books I recommend anybody if they really, not even about finance, right? Just to change your application of your money, how your thought process is when you're working, doing a job, even at school, is number 1 is Rich Dad Poor Dad.
Yep.
Fire.
It's a good Anybody out there who hasn't read that book, go read it.
It's a good book, right?
I'll have to read it. I haven't read that.
Not only does it teach you about your finances, but also how you should really change life.
The perspective.
The perspective, right? It's not really about just doing a job. It's like, what's the skills you apply from the job, right? Old saying, like my parents used to always say, when you work in the factory, don't just learn how to make candy, learn how the structure works and employment, who brings in the shipments, how they even format the candy, who wraps up the candy, so when you do get laid off, you can take that skills and be more leverageable in the next job, right?
Learn how the manufacturing process
Exactly.
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 Yeah, right. Hey, this is going back to your favorite subject, operations management.
right? You got jokes, right? And the next book is Automatic Millionaire, right? So there's 3 types of learners, right? Auditorial, visual, and tactile. Me, I'm really the tactile learner, but auditory is pretty interesting, but not a lot of people can know.
What is tactile, real quick?
So tactile is when you touch stuff. You really have to do it to actually learn. Visuals from watching someone do it, auditory you just hear it.
Hands-on, right?
Correct, right?
Got it.
So, but finance is a little more different though, because that's math. If anyone could really listen to math and understand it, I wish I got that skill, all right? But Automatic Millionaire shows you if you just be disciplined for money, put in $3,000 in a month, you'll be a millionaire by the time you're 60. And that's if you start in your 20s. But it gets even better. If you start when you're like 10, you have to wait like 20 or 30 years. Don't quote me on that.
Compound interest.
Compound interest. Eighth wonder of the world. The Einstein states, and you'll be a millionaire by the time you're like 40 or 50.
That'd be nice.
Right? And there's an old saying like Einstein says is, whoever learns it earns from it, but who doesn't pays it. Which shows that the longer you wait, the more you have to put so much money that pulls out your capital that you want to use for shopping, vacation, you know what I'm saying, any other stuff.
Just cash flow, right?
Cash flow, you have to really save up and put in your retirement because you're not going to work when you're 60. And even if you have to, who wants to do that, right? So those are the top 2 books I recommend to read.
Cool.
Yeah, so going to the next topic, shout out Drew. You weren't be able to make it today, but we'll get you on the podcast. But one thing Drew taught me was to be unemotional with your money in the market, and that was really hard for me to understand and kind of just take in, because that's what you've earned it. You put hard work, sweat equity into gaining that funding and like the capital that you do have, and when you're seeing it go down, you want to pull it out instantly, but you have to have that stable mind and just like the constant knowledge. You said it's going to go up, the market's volatile, and there's going to be times that your money goes down and it's going to go up. So how would you say, like, what does being unemotional with your money, especially in the markets, mean to you?
Yeah, so what does it mean to be unemotional is put a certain amount that you feel that you don't care about, right? Millionaires is $1,000, college students 10 or 20 bucks, right?
Yeah.
Because we're college students, we don't have enough capital. So building off of that, for me, I have an Excel model, set it up, right? But to explain it, 30% is what I put in my total expenses.
Mm-hmm.
10% is for savings. 10% is for school, and also 10% is for investing. So sum of that up, that equates to like 60%. But looking at it, savings, total expenses is 3 times my savings. So it accounts for any other stuff to really pop up. Like school, really big expenses, I account for that. But showing us how I'm able to really account for those inconveniences allows me to be unemotional with money. So I have a game plan set up to account for those differences. So when stuff do occur, hey, I have money, boom, that's really it.
Do you think a big part of becoming unemotional with your money is taking those losses and understanding that there will be times, or do you, because for myself, I think that's what I had to understand, like, you're gonna take losses, but you have to just understand that you are gonna take losses and not everyone's 100% shooting from the free throw. So I think, do you think people learn in different ways, or do you think there's like a certain aspect to go about it?
Yeah, well, everyone's different, you know what I'm saying? That's what makes everyone special. So the best way is, who wants to always lose money, right? Let's be honest, right? So
That person, that guy going to the casino wants to lose.
Jeff, stop gambling.
So, that's a good question, right? So let's build off of that hypothesis, right? That example, casino. If a guy's constantly losing, let's say $1,000 each week, keep going to casino, he's gonna be smart, right? Let's not play this slot machine. Let's play this different slot machine, right? But he's keep losing money. So he's like, let me pick up a skill.
Or switch it up and run some tables, playing poker and blackjack. Like,
right. However,
switch up the process.
Yes, but that's when he starts practicing. Instead of losing $1,000, he's losing $800. But that gap is a $200 difference. And from that skill, he's like, okay, I learned something. Now let me change it up. Let me build off of this skill. Or let me mitigate my casino stuff. So let me diversify. Instead of putting on casino, let me start putting into stocks or something that's like risky so I can make a better return. So mitigate that 800 to 500, that's a $300 difference. So what I'm trying to show you is how people learn different perspectives, but we all learn mitigating risk so we make a lot more smarter investments in our money.
Absolutely. No, that's a great point that you bring up, because people could literally be going to the casino because it's addictive. I went to the casino for the first time last Thursday. I'm not going to talk about the turnout, but I think people overall just need to be more disciplined with their money. I have a couple thousand in the stock market, but nothing too crazy. But I've actually just restructured and you can critique me on this process that I just did. But I restructured all of my whole portfolio in Coinbase into strictly ETFs and index funds, rather than just having all my money in one account.
Yes.
I just feel like it's safer that way, and it's bound to increase over time. I'm not that knowledgeable about the stock market in general, but I feel like that was a safe move.
Yeah, 100%. Yes.
So I want to ask you guys a question. What would, if someone asked you, what would, like, being unemotional with your money, what would that sound like to you? What does that mean to you guys?
Yeah. I think being unemotional with your money, right? So, like I was talking to Shariff earlier, just being disciplined with your money, and not putting all your eggs into one basket, like dispersing your money through like different ETFs and different indexes. I guess relating that to the stock market, but just in life in general, like track your purchases and track really where your money is going on a monthly basis. And whether, there's, like Sharif was touching on earlier, there's certain strategies and tactics that everybody utilizes. Everybody doesn't use the same strategy on a week-to-week basis, but for me, it's, tracking all of my expenses and purchases and income that I have in a given semester in Excel, and I can allocate, certain money to certain
You might have to
funds.
send me that model.
Oh, I got you. Yeah. Hey, shout out to Chris Yerkins, actually, my older brother, 24. He's in Indianapolis right now working. But shout out to Chris for being a great
finance guy too.
He's engineering. But no, he's the one that he's been a great.
Shout out Chris.
Yeah. Very inspirational brother to look up to, and he's what got my finances in track. So
Nice.
Riley, how about you?
To be unemotional with your money, for me, I guess it would all come down to kind of the caveat on like piggyback. I agree with what everybody said, but to kind of push it even further, I guess it comes down to like strategy long term, really, and thinking about like for investments in specific, like how you have them structured and the strategy behind having maybe you want to have your emergency savings, you want to have your short-term investments for things that you want and desire, and then your long-term. And by allocating money properly into all those buckets, I feel like that allows you to be unemotional because it's already going there. So just set things up to automatically kind of disperse out, and then you never, in essence, see that money and it's going to the right places. So that, for me, would allow me to be unemotional because the rest of that play money or whatever, as long as it's delegated and budgeted the right way, you can kind of do what you want.
Yeah, that just reminded me of like the whole story of when I learned what being unemotional with your money was. So Drew Foster's finance, go look at his LinkedIn, connect with them, say something to him. But yeah, he would probably give me some plays in the market of like from analysis he's done or like news that he's seen, and he would put his funds in there, and I would hold back because I'd be like, oh, I don't want to put it in, and it would go down. And then Drew would be like, come back, like text me in the morning, be like, bro, you see that 40% like uptick? I'm like, I'll text him back like, no, I didn't put the money in. So it's just like, you have to cross that barrier of like, just risk. Like you have to take risks to earn rewards. So I think that was the barrier that I had to hop over. And I think it really helped me just in general with life, and just even if it's just like eating out or just being unemotional with your money, because at the end of the day, you can't take it to the grave, but still want to get as much as we possibly can. So
to go off that, like you said, taking risks and jumping over that fence, because when the market's low, nobody wants to buy.
Not at all.
But I mean that's the time that you have to pull the trigger.
You just can't. You gotta get past that. The fear part.
Exactly.
It's hard too because you're like,
difficult.
If I don't want to lose this money. Like, risk for reward.
I guess so. The next question we can touch on, Sharif. What valuable life lessons has specifically investment banking taught you throughout your career at UC here?
Or any classes in Linder
or just in life in general?
News, finance.
First one is you earn what you hunt, right? Meaning what you put in is what you get out. Very tough process. Made me cry, actually. Alright? But you really have to put in the work to get out of it. From a personal standpoint, be able to pitch yourself, like where you communicating, does it make sense, right? That's one. Big. Secondly, is technical. I don't want to talk to a guy who sounds like they know it, they don't know it. And then thirdly is kind of trust you. So that kind of goes on both plays, to kind of trust and do more work, and also kind of give more responsibility long term. So that is how investment banking kind of relate. But really, it's just like you gotta be able to put in the work, man. Very challenging, very hard. Most prestigious. Like if you're really serious about finance, that's the top thing you go for because it's so competitive. However, the good thing about investment banking is you learn everything at 2.5 rate. Why? Because you're working 80. You're working 100 hours a week. And
that's madness.
But here's the thing, right? So I'm pretty religious. God's gonna make a way for you, right? If you stay faithful, put in the work, He's gonna give you the chance to be better, and He's gonna put people around you who are conducive to your mental health, physical health, spiritual health, and also your just your health in general.
Dude, I can.
Wisdom right now. Y'all need to listen to Shariff.
Very knowledgeable man right here.
Yeah,
but this semester, I was going back to faith. I'm pretty religious as well, and this semester has really shaped me in to having a stronger and deeper relationship with God. And the more and more I trust Him and chase after Him, the more and more I see Him, providing for me and working in my life. Yes. And it's really crazy just to think about how far I've come with the process. I'm sure you can relate to it too. So
no, I agree with you. And building off of that, one thing I always understand is He will get you from point A to point B. He just wants to make sure
you gotta trust Him.
Trust, and also are you willing to sacrifice? Right? Putting off of it, right? Even from Abraham to Moses, so many Bible people, even King Solomon, they had to trust God and sacrifice. And they knew, that's the funny thing, even today, right? We all know our distractions, but are we willing to sacrifice our distractions to get to our destination? So that's right.
Short-term sacrifice for long-term gain.
That's what
what I learned that when I was preparing for that or Red Ventures interview.
Yeah.
Like people be like Thursday, Friday, Saturday, people going out, just in my room, like crunching numbers, multiplying percentages in my head. Just like you see your friends like out, like having a good time. And you're like, dang, but I got a bigger goal I gotta accomplish. So.
I got a good question. Talking about compound interest, that's a huge thing in finance, obviously. How do you see the concept of compound interest applying in your own life and other aspects?
That's a good question. Wow, that's a good question, right? So you have to expand the compound interest, right? So building off of that, that compound number is still be the same in terms of years, but really what the discount rate is what makes the compound interest good. The discount rate could be higher or lower, and what you're gonna do to really mitigate that issue, right? The higher the discount, the more the cash flows in the future, because even for a person, it gets lower. So for me, being able to reach my goals, staying successful, putting God, family, friends, even like education, that allows me to mitigate that discount rate so I have any other issues that occur to allow me to really be the best me in the future, to answer your question.
I like that a lot.
Yeah, I got one question. I'm reading Principles by Ray Dalio right now. And one word that they always speak on is leverage. And I know leverage is like power, or in a sense.
Yes.
What is leverage, Sharif? Because I'm so confused, bro.
Okay, it depends how you want to, like, you know,
So,
finance or just in general.
Yeah, there's a lot of
I should have,
like,
finance.
real estate.
Finance. So
Okay,
like, I'm leveraging my position.
Okay, so leverage means more of a debt, like put in more debt. Debt is good or bad, right? Debt is, from their standpoint, is pretty bad because if you're so levered up, it could cause your risk to really increase. So, layman terms, right? Let's say my house note was, let's say my house rates were pretty high, right? But if I'm so levered up in my interest rates, let's say for next month, it will constantly increase.
It's gonna be higher.
Causing more cash with my capital to be more given out to me, right? That's from a quantitative standpoint. But from a non-finance, levered up really means is how you're gonna leverage your skills to really put yourself in a better position to allow yourself to succeed. So, and that's the funny thing too, Ray Dalio, he focused more on the theology, more of a, who are you as a person, right? From us being college students, from us pitching ourselves to people, and each and every day, that's the thing, we're really selling ourselves.
From everything you do.
Yeah, trying to press ourselves.
Hey, watch out for the LinkedIn post. That's my topic. So.
No, literally,
yeah.
Literally, right?
And selling yourself.
We're like 30 minutes already.
I was saying, the people that our audience right now listening to Comin Correct is mainly, I would say, young college students similar to us, trying to just evolve their career in every way possible. A lot of people are, I would say, inexperienced investors, in my opinion. So any tips and tricks for our audience on just ways to get more involved in investing and, strategies to truly start out at the beginning to, to establish a worthwhile portfolio.
Yeah, so that's really good. That's really good. So let's start off benchmark and let's work our way down, right? So benchmark is SP 500, makes up the top 500 public companies. So why that's good? Because it reduces the volatility. Volatility means beta. Beta means risk, right? So if you have a very diverse portfolio,
I just learned that, like beta and alpha.
yeah, beta
I
alpha,
just
mitigate the risk. So if you just want to get a good return, put your money in that to reduce risk.
S&P 500.
There you go, SP 500, right? But it gets even better. And building off of that, let me do the technical analysis, right? Let me learn about some companies. So you have to be crazy, but does a company sound logical? So if a company is growing at a top line, really look at the bottom line. Top line means the total revenue, but bottom line means net income. That determines if they're really profitable. And you need to show just growth over time. So that's like a high level, but just basic level is watch videos, man. YouTube is the best resource from an Indian guy teaching us a subject we don't even know. Right?
Khan
Academy, right? Even just talking to professors, they can teach you a lot about your basic finances. But here's the thing though too, here's the tricky part. Making money is the easy part, but taxation is your worst friend. So invest in your Roth IRA. Why? Because you pay taxes now, so in future years, you won't get hit with tax. And that is one thing that a lot of wealthy people try to get around, so we pay taxes. So if you have a tax accountant, if you have a friend that's a tax person or a person in accounting, make that your best friend so they can help you out.
Yeah, that was one thing I was going to say. Surround yourself with people who are in the realm and like in the industry, because even if you're not specifically speaking on it in like a certain moment, just the things they say, like the knowledge they give you, and like the resources that Sharif talked about, you'll tap into those at times. And even if it's just for a couple minutes, you'll still get that knowledge, build up over time. And one thing that's helped me is signing up for like Yahoo Finance emails, just getting those daily briefings on like what's going on in the economy. And then another one is The Economist, a podcast. It's 5 minutes every morning. It's not like geared around finance, but just gives you a little bit of game in there.
To go off that, I know this is all revolved around the finance industry, but for marketing, I've subscribed to like a marketing newsletter. It's called.
Send me that.
Yeah, man. It's called I think the Morning
Morning Brew?
Yeah, the Morning Brew. I was gonna say the Morning Blog, but no, the Morning Brew, and I just read it. It takes 10 minutes while I'm drinking my coffee, and it automatically, I think it's made me more knowledgeable about marketing in the past. So, yeah, that's
it. Also, Bloomberg. Five things to start your day. Bloomberg. It hits you with the facts about interest rates, what's going to happen in your economy, and also our government too. So yes.
How do you feel about tip ranks recently? I've been exploring on tip ranks recently, but it seems a little. I think it's a little complex for me right now.
Yeah. So what is tip ranks, right? So you're just saying analysts' recommendations of stocks, how they expect to see, and also look at your own personal portfolio of stocks you invested in, and they kind of see how you're doing from a risk to reward ratio, like meaning do you have a good on and off return of the risk you invested in, how you compare to the S&P 500 and also to other average investors, also the top investors. But it's a really resourceful source, right? Because like I said, you gotta be able to see how you're doing. You need to get educated, right? And make educated decisions in your investment. That's the reason why I kind of invest in cryptos, because you can't really educate yourself. You can't really determine what's your true investment.
You don't know what's going on.
Crypto to the moon.
Yeah.
I'm playing
It's basically supply and demand currency. Currency is basically supply and demand, but you're replacing currencies that are horrible currencies. So that's a baseline. So that's why I got myself on crypto.
Gotcha.
So yeah, I was listening to a podcast today, and I think it was talking about JP Morgan.
Okay.
And it was from like their standpoint on crypto from 2017 to like January 2022. And they first off said like crypto's not an investment class at all. Like don't invest in it. We will never do it. And then like 2021, they're like we see a little bit of potential in it. And then I think it was like the next one was like now we're offering crypto as an investment.
Totally changed.
And now they're talking about like DeFi and like NFTs. So I think it's funny, but yeah, it is an interesting because you don't know where it's kind of like the metaverse. You don't know where it's gonna go.
Yeah, it's all diversification.
The metaverse is a topic for another day.
Yeah, I was way over the line.
Maybe not even
I don't know.
topic.
Yeah. I don't know if y'all got a couple more
Well,
questions.
I got one more question to kind of wrap up. So going off what you were describing with tip ranks and how you can sort of like utilize it as a risk to reward ratio, have you, resulting from tip ranks, have you currently invested in any S&P 500 in the S&P 500 or in any index funds like relating to tip ranks?
Yeah, so that's a good question, right?
This is not financial advice. Sorry, every podcast says that. I think it's so funny.
Yeah, so that's a really good question. So I read the news every day from Bloomberg, Morning Brew, even healthcare specific case studies or stuff that interests me to give me a good understanding, right? So there's technical analysis and there's passive analysis, or also just kind of like just passive investing. Technical investing. Technical investing is where you really look at the company itself and see how they're doing, the cash flows, look at the financials, and also look at the management rationale. Are they smart, right? Let's go. That's funny, right? Serious though, right? Passive is S&P 500, ETFs that are very diversified.
Yes, right.
So building off that knowledge of tip ranks, other helpful resources that I utilize, Bloomberg helps me, makes me informed, so I kind of know what to do with my investing to diversify from technical stocks, which is all, and technical means just one stock.
Okay.
Target, Amazon, you name it, just one stock. ETFs, diversified. SP 500, NASDAQ, what else? Investico, those diverse stocks. And lastly is, you gotta factor this in, bonds. Bonds, man, you'd be interesting.
It's
Low-
hard to understand.
Bonds
Bonds are different.
You
bro.
hate them, but you gotta love them because it mitigates the volatility. And volatility means risk.
So when inflation's high, you go to bonds, right?
There you go. Because why? Because when interest rates are, inflation is high, right? And the inflation is high, you increase interest rates to decrease inflation. Why you increase interest rates? To stop people from spending. Because it's more expensive to borrow things. That is why they increase interest rates, which mitigates inflation in future years. Now, building off of that, that's why investors put their money into bonds, because they get a better return on their bond building off that interest rate. Because the interest rates are 3%, and lender's going to charge more than 3%, 7 or 6%. So building off that 6 and 3%, that's 9% your total return that you're going to have from your investment from investing in a bond. And the good thing about bonds too, depending if it's a government bond, there's actually industrial grade bonds that are giving out 10% return off your investment just because interest rates are constantly increasing.
Wow.
No, yeah.
That's a whole new.
I'm
looking
reading
at it a whole new
principles.
way.
It's like if interest rates up, this is when you go to bonds. I'm like, okay, I understand that, but why do you go to bonds? And now it all just makes sense.
Yeah. COVID is like the best learning opportunity for anyone in finance because you're seeing how all these economic tools are getting played. From stimulus spending, from government spending, even supply chain issues, seeing, oh wow, this is how we're seeing everyday life.
Gotcha.
So yeah.
Okay, I got two like fun questions
Yeah, let's
to
do
end
it,
the
let's do it.
podcast. So the first one is, it's kind of random and weird, but what would, if you could only spend, like have $1, like a certain dollar bill, if it's a 1, a 5, a 10, a 20, 100, 50, for the rest of your life, you can only use one. So like if you get change, you gotta go to the bank and like convert it all into one,
Okay.
and then one coin, 2, and then the last one was, I just blanked on the last one, but
We can focus on the two.
yeah, if you had to use $1 bill and then one coin, what would it be? And you gotta think about like
So
getting
it's-
change and then like going back and getting it.
Yeah, I like that. I'll start with 20. 20 is pretty
Okay,
easy.
yeah, that's what I was
I
gonna
was
go
thinking
with.
at 50, but people are iffy with 50. It's definitely 100s. People hate 100s.
Yeah,
because
you
you
know.
break it.
Yeah.
Takes out the whole cash.
You might not be able to spend it.
Exactly. 20s are easy, pre-transferable,
Mhm.
and that's number one. Secondly, is a quarter. Everyone loves George Washington.
Shout out George.
Yeah, that's my top.
I think
two.
that's exactly what I'm going with. I would love to do 100, but it's just like, it's not practical.
Not practical at all.
at all.
I think for me it would definitely be 20s would be the front runner, and then I was as a little kid I collected $5 bills just because like
Nice.
I mean I thought dude $5 bills was a lot to me, and I had like 300 of them just chilling in my wallet upstairs. I'm like, yeah, but that'll go to college real quick. But no, I would say 20s and
I can
probably
mess with the dime.
yeah, probably a quarter. I would say.
I would say realistically, like my answer is the same, but just for the purpose of being different, I'm gonna go with the $2 bill.
Yeah.
Maybe it'll be worth more than the $2
Yeah.
bill at some point.
That'd be
And
fine.
then, yeah, you gotta go with the quarter.
Yeah.
I mean,
Yeah.
I think
Dang,
we
I
just need
don't
to
know
roll
what
the
the
quarters.
question was, bro.
Well, I have one more question for you guys.
Yeah.
What do you think is your biggest challenge in life?
Okay. It's a big question.
It's not. If you really what do you think is your biggest challenge in life?
I got one.
Go ahead.
Trying to find a mix of proper balance, like your own personal proper balance,
Yes.
as well as feeling fulfilled through your purpose.
Wow.
And also identifying what that purpose is along through the journey. I think that's the challenge.
I think the biggest challenge for specifically our generation in general is adapting with technology. That's one, and then finding out what God has in store for you and what you're passionate about and where you see yourself in the future. I think that's a big challenge that a lot of people struggle with because they're majoring in something that they really don't really know the true history and background behind what they're majoring in, and they don't know how they can excel and take off in that industry. So I would say tech, adapting with tech, and finding out what you're passionate about.
Yeah, that's mine. Finding out your purpose. I think that's one of the biggest challenges. And what really faith has helped me understand, like, tenfold. Really just understanding what my purpose is just help people in general and spread the gospel and all that. But another one I think is just being content with being alive and waking up every day. But at the same time, what Riley said, pursuing those interests that you have like everyone wants to have $1 million, everyone wants to have a nice car, a nice house. But I think at the end of the day, you have to be content with just being alive, like being with your friends and being content with what you have and just life in general, because something can happen, like with Dwayne Haskins, like no one expected that. He was so young, 24 years old, and in a blink of an eye something happened. So I think that's one of the things that goes over a lot of people's heads in our generation, is just being content and being okay with the now, even if you don't have what you desire, what you want for
That's
the
big.
future.
Yeah, dude, because every day is not guaranteed.
No,
you gotta be
not
grateful
at
for
all.
every day. No, that's a good point.
100%.
What about you, man? What about you?
I'll probably say for me is crossing my T's and dotting my I's, right? Be more detail oriented. That's my biggest challenge. And then secondly is stop being a workaholic.
Okay.
Right?
Because I know you are a workaholic,
Yeah.
Sharif. You be working
Work
until
so hard.
You be working
Yeah.
until 3 a.m. every single night. I'm like, Sharif, I'm trying to go to bed, man. Like,
And I'm a perfectionist. That's the biggest thing. That's the biggest challenge, right? So having a work-life balance, King Solomon says, Escalades, he says, people who are workaholics don't really enjoy what God gives you in life, right? But you gotta have a balance, right? It kind of goes with what we said in Listen Sermon. There's two tables. There's a pleasure table where people are drinking at the time, and there's a astute, people are really stern. But if you really could find the balance, know time and place, that'll allow you to be successful. So I feel like trying to relax a little and really stay focused, but kind of relax. Well, those are two challenges I struggle with.
Stay focused, boy.
Yeah,
All right. Well, yeah, Sharif, that was so much better than I like the wisdom you gave and like just the way you put your thoughts together and just the knowledge you bring was insane.
Fire first.
Yeah, that was perfect.
knocked it out of the park, man. But
100%.
Sharif, we want to thank you for coming on, Comin Correct, episode 3.
Yeah.
Thank you.
That was heat.
Yeah.
Hey, everyone go follow Sharif. Go connect on LinkedIn.
Yeah,
Instagram,
I'll
if
drop
he
for
wants to
Ricky,
accept
drop it in front of him.
Yeah. You'll see him soon on Wall Street. One day in the future.
Yeah. All right, boys, let's snap out of here.
Good.
Riley, you got it?
3, 2, 1.
All right, thanks for watching episode 3 of the podcast, guys. We had a guest, Sharif Johnson. Very great guest. So stay up to date with us. Ricky, Instagram, Twitter, portfolio.
Yeah.
Riley, Instagram, Twitter, portfolio. Josh, LinkedIn, Instagram, big on LinkedIn, I already know.
Yes, sir.
Instagram, TikTok, and lastly, Joe Yerkins, Instagram, TikTok, LinkedIn. Let's go, baby.
Comin Correct.